Dr. Martin Luther King said, you don't have to see the whole staircase, but you got to take that first step in faith and the next step will be revealed. I can tell you, sometimes that single step can be the most important step of your life. So for those of you that are analytical and you're some of the most successful people in this business, but you also very often have to check off every single box before you make a move. You can't do that here. You got to take that first step, recognize that you may not see the whole journey. You can drive all the way across the United States at night with your headlight only seeing 50 feet in front of you. You know you can make it. You know other people have done it before. You may have some obstacles, but it's the same way with your goals and your dreams.
What's going on, everybody? Welcome back to another episode here on the Multifamily Wealth Podcast. In this episode, I'm chatting with Rod Khleif, and you've probably heard Rod's name a handful of times in recent episodes on the podcast, specifically because I've been reposting episodes that I've done on his show, both where he's interviewed me, and then also solo episodes I've done on his podcast feed. And bringing Rod on mine, one, because it's going to be a valuable episode where we talk about a lot of current events related topics as it relates to what's going on macroeconomically, as well as what Rod believes to be coming in the short term as it relates to cycles and real estate opportunities, distress within the multifamily sector. Rod famously lost $50 million in the '08 crash and is very open about that and talks a lot about what he learned through that experience and what he sees as opportunities coming up. And the reason I'm having him on as well is because I'm going to be speaking at his boot camp. So I'm helping him just promote it a little bit as well, which is not like a big money grab. It's a couple $100 in Orlando. It's one of the more well-known multifamily education kind of resources, seminars, boot camps, etc. And I'm also doing a lot of training on Rod's podcast feed, which happens to be the largest commercial real estate podcast in the industry. So bringing him on mine as well to talk about what I'm doing there. In this episode, though, we do get into tactical stuff. This is a great standalone episode. Rod gets into a lot of mindset related conversational topics. He's big on mindset, psychology, all of that as it relates to developing the skills and comfort, knocking down those limiting beliefs, putting yourself in a position to actually make the leap into larger deals if you're trying to scale and get into large multifamily. Or if you're just somebody who has yet to do a deal and you've been kind of circling a lot of different deals, but you haven't really taken action yet, this is going to be a great episode as it relates to motivating you to actually take that step, to make that change in your life and your business. And then I also spent some time at the end talking to him about the mechanics of putting together large multifamily projects, such as how you start splitting up a deal. How do you actually structure deals when you're bringing a deal to somebody who has money, or if you're somebody with money, how you compensate somebody for bringing you a deal. We talk about how people can come, how investors can prepare themselves for what may be some kind of price correction in the short term, specifically those folks who already own assets, but they're trying to put themselves in a position to be on the offensive if that does happen. Comes back to having money and knowing people with money, but we get into that as well. So this is going to be a great episode for all of you out there. Be sure to give it a listen. Rod does plug the boot camp a number of times. He's a born salesman, but it's worth the plug. I know many people who have gone to his events, and they always have a great time. And I'm just going to be speaking at this one in November as well. So therefore, I'm also interested in pushing people to it as well so that I could increase the turnout just for my own presentation at this one. But thanks again for listening to the podcast. Again, we recently just crossed 250 episodes. I'm hoping to hit 300 ratings on the podcast by the end of September, which is not too far away from what the release date of this podcast is going to be. If you are somebody who has listened to the podcast and you have learned anything, if you've taken anything away from this show, please consider just leaving a quick review and a rating. It takes you 5 seconds, but it really helps the show grow and get noticed by more folks. But without further ado, let's get to my interview with Rod Khleif. What's going on, everybody? Welcome back to another episode here on the Multifamily Wealth Podcast. Joining me is Mr. Rod Khleif, host of Lifetime Cashflow through real estate investing. I think it's the biggest commercial real estate podcast. That's right, Rod, isn't it? Yeah. I think it's most downloaded at least.
Biggest in the world. Biggest in the world, and I feel like such a big shot when I say that, but yeah.
Well, it's a hell of a title. Also a multifamily investor, multifamily operator, somebody who's been through a couple of cycles here, somebody with just, multiple decade plus track record in real estate investing, which we're about to get into. But as I mentioned in the intro, Rod and I are working together. I'm working with his Warrior program, and I already kind of ran through that in the intro here, so I won't spend too much time on that. But Rod, why don't we start with your story for anyone who's listening that's unfamiliar with it? If you want to
Sure.
go back, work back
Sure.
into how you found real estate and some of the early challenges that I know we'll probably get into here, and then we'll progress into what you're up to today.
Sure. No, sounds good. So I'm going to go way back because it'll add, some color to what we're going to talk about. So I'm an immigrant. I was born in the Netherlands. Think wooden shoes and windmills, and I immigrated when I was 6 years old with my brother Albert, my mother's Vansha. We ended up in Denver, Colorado, and I was there for 30 years actually. But when we first got there, we really struggled. We didn't have a lot of money. My mom actually babysat kids so we'd have enough money for food and clothes. I mean, I remember we shopped at an expired food store because it was cheaper than real food. And believe it or not, they had it back then. And we drank powdered milk with our cereal in the morning because it was cheaper than real milk. And trust me, it sounds better than it is. And we, I wore clothes, like I say, hand-me-down clothes all the way through junior high school till I finally lied about my age when I was 14, got a job at Burger King so I could buy my own clothes finally. And I'm sure you've got listeners that had it harder than I did, or maybe have it harder now with this economic uncertainty we're in. But I knew I wanted more. And like I said, my mom babysat kids. She had an incredible work ethic. So she became an investor with her babysitting money. She invested in the stock market successfully and also invested in real estate. And her first real estate acquisition was the house right across the street from us. She bought it when I was about 14 for about 30 grand. And then when I was 17, she told me she'd made $20,000 in her sleep that had gone up in value 20,000. I'm like, what? And this is when 20,000 was a lot of money. I'm like, you made 20 grand, you didn't do anything? I'm like, screw college, I'm getting into real estate. And so I got into real estate, and I was still living at home. My first year in real estate, I made about 8 grand. My second year, maybe 10 grand. But my third year, I made over $100,000, which was back in 1980 was some serious change. And so what happened between year 2 and year 3 that caused me to 10x my income? Well, what happened was I met a guy that taught me about the importance of mindset and psychology, and how really 80 to 90% of your success in anything is your mindset and psychology. Only 10 to 20% is the real estate stuff we talk about on our podcasts. It's really the do and it's the keep doing. And fast forward to today, I've owned over 2,000 houses that I've rented long-term. I now own thousands and thousands of apartment units. But in 2006, my net worth went up $17 million while I slept. And you might say, wow. I said, wow. And I got a head so big, I could barely fit it through a door. I thought I was a freaking real estate god. And you know when that happens, God of the universe will give you a nice little smackdown. Well, that was 2008 and 9. I lost $50 million conservatively in that crash. And so, what I'm known for talking about on my show and at my, my training with my warriors and my boot camps is the mindset it took to have 50 million to lose in the first place. And maybe certainly as important, maybe more importantly, the mindset it took to recover, to get back from that and get back to the success that I'm blessed to have today. So, happy to drill down on that with you a little bit, Axel, maybe give some of these strategies that I use to recover, because they're the same strategies, frankly, that you use to get started, to actually take action. So if you'd like, I can drill down on them a little bit.
Let's get into those strategies, and then I'm going to head back into some of the what happened in 06, 07, 08 that caused all that. But let's talk about how you, because
it's coming.
And,
it's coming again.
That too.
Yeah, we're going to talk about that, guys. The proverbial, what's about to hit the fan, and I'll tell you why when we come back. But let me give you the strategies you're going to want to implement to take advantage of what's coming. Okay, the first thing is you got to create a hunger. You got to create a burning desire. You got to do your goals. Okay, it all starts with goals. And so, if you come to one of my boot camps, that's one of the first things we do is goal setting on steroids. I've got one, by the way, a live event coming up in November in Orlando. It's the only one I do every year, just where it's me for 3 days. But be that as it may, the first thing we're going to do is goals. So how the hell do you get anything if you don't know what it is, right? You got to want it as well. And you got to know why you want it too. And that's how you push through fear and limiting beliefs, or, maybe get a little uncomfortable. We know the comfort zone's a nice warm place, and we also know nothing freaking grows there. But, even if you've got average ability, if you've got a burning desire, success is inevitable. So, you've got to find what it is you love. You got to find your mission of purpose in life. And, I will tell you, in what's coming, if there was ever a time to get up to speed and pick a vehicle to take advantage of what's coming, it's right freaking now. But, you've got to want it as bad as you want to breathe. And you do that with goals. Okay. But then you've got to make a decision. Okay. And I don't mean dip your toe in the water. I don't mean 1 foot in, 1 foot out. I mean, it is freaking done when you make that decision. And when you do that, you're committed. You're like a train on a track. Now, if you're just interested, quote unquote, you're going to get knocked off track. Okay. And when you're committed, you made a decision, you're committed. It's no longer a dream. It's a freaking outcome, right? See, motivation will get you started, but when you make a decision, you get committed, that's when you get home. And that's how you bring it home. And so once you've made that decision, and by the way, the Latin root for decision means to cut off. Okay. It means like if you're going to attack the island in battle, you burn your ships because you're taking their damn ships home. That's a freaking decision. It's not, there's no side exit ramp from that decision. But then you've got to take the first step, Axel, and you know this. And I see it with my students all the time. And, that first deal that they get, it's the most stressful. It takes the longest. It's and they're agonizing about it. I see it with my warriors all the time, and it's been 3 months, 5 months, 6 months, whatever it is. And I'm kicking them in the butt. And then they get one. The next thing I know, they have 3. I'm like, what the hell just happened? And it's because they come to realize it's all between their ears. Dr. Martin Luther King said, you don't have to see the whole staircase, but you got to take that first step in faith and the next step will be revealed. Lao Tzu, thousands of years ago, said the journey of 1,000 miles begins with a single step. But I can tell you, sometimes that single step can be the most important step of your life. So for those of you that are analytical, and I love you, and you're some of the most successful people in this business, but you also very often have to check off every single box before you make a move. You can't do that here. You got to take that first step. Recognize that you may not see the whole journey. You can drive all the way across the United States at night with your headlight only seeing 50 feet in front of you. You can make it. Other people have done it before. You may have some obstacles, but it's the same way with your goals and your dreams. And, we can't have any regrets, guys. I will tell you, and you know how you might fear failure? Don't fear failure. Fear freaking regret. Okay. I don't call them failures. I call them seminars. And I have built 28 businesses so far, 29, scratch that. I have one more now. 29 businesses so far in my career, several worth tens of millions of dollars. I got 3 right now that are, but most are spectacular flaming seminars. Okay. But don't fear failure, fear regret. There was this nurse in Australia, a hospice nurse that took care of patients when they were about to die. Her name was Bronnie Ware. And she asked her patients a question, Axel. And the question was, do you have any regrets? And she even wrote a book about it. It's like something like the 5 regrets of dying. And you know what the number one regret was? Not living the life I could have lived, living someone else's life, not doing what I know I'm capable of. I can't think of anything worse than that. So again, don't fear failure, fear that. Okay. And speaking of fear, let's talk about that for a minute. What is fear? F everything and run, false evidence appearing real, probably. I like to think it's face everything and rise, because I will tell you that everybody, even the most successful people on the planet, have fear. Now, us achievers, we call it stress, but it's the same thing. But they push, the successful people push through in spite of it. And let's talk about limiting beliefs for a minute. So when I immigrated this country, I got thrown into school, and I got a prop back here that's hilarious. Hang on a second. So I got thrown into school, and I found out what bullies were for the first time. And then my mom sent me to school in these freaking wooden shoes. These are the actual freaking shoes. We found them in the house when we put her in assisted living. So I got my ass kicked again. And then, the bullies would chase me home from school, and she'd chase them off with a fly swatter. So the next day, ass beaten. And I came up with this belief system that I wasn't good enough. I used to tell myself, I discovered this question like years later. I used to ask myself, how can I show them I'm good enough? Now, see, a lot of people have these belief systems around, I'm not good enough. I'm not strong enough. I'm not analytical enough. That was another one of mine. I'm not old enough, young enough, whatever. And I don't have enough time. I don't have enough money. But see, here's the thing. The reason the acronym for belief systems is BS is because 99.9% of them are BS, but we believe they're real. So if you've got one of these, they have no basis in fact most of the time. If you've got one of these BS belief systems, drag it out into the daylight. Recognize that it's BS, and you start to do that enough, and you'll diminish it. I mean, I used to be afraid to raise my hand in front of 15 kids in a classroom, and now I speak in front of thousands of that Orlando event. There'll be 1,000 people there, like my last one. And so you can diminish any limiting beliefs you have if you do that and look at it with your adult rational mind. When it comes up, consciously look at it, and you'll diminish it. The next thing I want to touch on is focus. The most successful people on the planet have the highest degree of focus. Focus is power. Where your focus goes, your energy flows. And but here's the thing, whatever you focus on gets larger, both positive and negative. And with what's happening economically here with the stock market crash we just had, and I know there's going to be more of that. Trust me, we're going to talk about that in a minute. But if you're focused on that, that's going to get bigger. Okay. Like I'll get people call me and say, how do I get out of student loan debt? I say, wrong question. How do you make so much money? The debt's freaking irrelevant is the question you want to ask, okay? They asked Mother Teresa if she was anti-war. She said, no, I'm pro-peace. I mean, you get the distinction. And so here's the thing. I listen to two podcasts, okay? I listen to Joe Rogan and I listen to Tim Ferriss. So I get both sides of the aisle. I'm definitely on one side. Trust me on that. Well, on the other side is Tim Ferriss. Now, I love his show, even though he's a raging liberal, but I love the show. And he interviews the best of the best in the world, okay? Like the best athletes, Michael Phelps, NFL, NBA players, best actors, Ed Norton, Hugh Jackman, Jamie Foxx, Arnold, billionaires like Ray Dalio, heads of the biggest companies in the world like Zuckerberg. And he deconstructs their success. And I started to notice a pattern in these interviews. They almost all meditate. What does meditation enhance? Focus, right? So focus is super important. I've just got a couple more of these, Axel. Thanks for humoring me on this because I love this topic. But the next one is you got to play to your strengths, okay? Especially in the multifamily game, my multifamily game, which is larger multifamily. You're not going to do it on your own. It's a team sport. And so you want to play to what you're good at, because when you play to your strengths are your greatest assets. Now, when you play to your strengths, number one, you love what you're doing because it's your strengths. And when you love what you do, work is play. You never work another day in your life. But you want to play to your strengths and hire, align, or partner for your weaknesses. Success is inevitable when you do that. Now, I see it in the multifamily space that I'm in, where I'll get an analytical person that'll align with an extroverted person, and man, that's a match made in heaven. So, and when you play to your strengths, you're going to be passionate. And when you're passionate, you need passion to influence people. Okay. And that's how you get that passion, because you're doing what you freaking love. So again, don't focus on your weaknesses. Focus on building your strengths. Super important. All right. One of the last pieces here is your peer group. When I was losing everything, and I lost 50 million in 2008-9, I was in Tony Robbins' Platinum Partnership, which is a high-level mastermind. And I've been in multiple masterminds, and I'm in one right now. But that was like 130 grand back when that was a lot of money. And so I was around people that had prepared for that crash, that were killing it. They were thriving. And they're like, get up, you puss, 50 million schmillion, go make it happen. That's who you want to be around when it hits the fan, guys. So you got to get around people that want more out of life, that aren't afraid of your dreams. So, again, my boot camp's a great place to do that. There'll be 1,000 people there. But even if you can't make it to Orlando in November, go to local meetup groups, but get around people that want more out of life. Because, you've heard the adage, you are the people you hang around with. You're the sum total of the 5 people you hang around with. And I will tell you, there's nothing further from the truth. You show me your 3 best friends, for example, I show you who you are. Your happiness, your health, your spirituality, and definitely your finances. Okay. So, you got to, and most people will default to a peer group they went to school with or they work with, which, and very often you've got naysayers in that group. They have their own fears and limiting beliefs, and sometimes it's family. So I'm going to tell you, choose your family. I mean, love your family, but proactively choose your peers, people that will hold you accountable, hold you to a higher standard, people that think what you think is hard is easy. Okay. Super important. And don't fear failure. Okay. You only fail if you don't get back up. Again, I've started 28 businesses. Most of them failed. There were seminars. That $50 million was it was an expensive freaking seminar, but it was a seminar, right? See, failure and problems give you feedback, and you don't grow unless you get that feedback. Okay. Super important. And so, all right, that's pretty much it. Those are the big pieces. I mean, there's a couple pieces we may end the show with, I'll mention, but we can go ahead and talk what I think's coming. So let's talk about what's happening in the marketplace right now. And I'll tell you a couple very sobering things. Number one is, I don't know if you know this, in the last 4 years, 80% of the currency in the United States was created, okay? Up to 2020, only 20% of the currency that's in circulation right now was created. We have created another 80% in the last 4 years. And we're wondering why there's inflation. I mean, hello, okay? And And here's the thing that's really scary. It's our national debt. Right now, we're paying $1 trillion a year in interest on that national debt. It's more than Medicare and Medicaid, okay? If you want to be freaked out, go on Google and look at and do a search for the difference between a million, a billion, and a trillion. It will blow your mind how much a trillion really is, okay? Now, here's what else is scary. Our national debt right now is going up $1 trillion every 100 days, okay? Tell me what's wrong with that picture, right? So, the proverbial, what's about to hit, is going to hit the fan. That may not happen this year, it may not happen next year, but at some point we've got to pay the piper. And so, and I will tell you, even if that doesn't create the crisis, although I think it will, Jamie Dimon, the head of JP Morgan Chase, he's the CEO of JP Morgan Chase, arguably the largest bank in the world, because the only banks that are larger are state-owned Chinese banks, said that there is an economic tsunami coming, okay? Said we're headed for an economic cliff because of the debt. Elon Musk said they're lying to you. The crash is going to be bigger than they say. Donald Trump, love him or hate him, he said it could be as bad as the Great Depression. Now, I'm not trying to scare you guys. I want you to get excited. If I hadn't been hiding under a rock in 2008 and 9, I'd be on the back of a 200 or 300 foot yacht right now, okay? Because I would have bought the properties that went into default. And my God, you see what's happened. It's going to happen again. And see, the beautiful thing about inflation is when you buy property, your debt is fixed. Your debt's not going to go up, but the value is going to go up because the value is based on a multiple of the net income, and rents are going to be impacted by inflation just like everything else. I think rents are really going to spike in in next year in 26. I really do. And so, there's no better play than real estate to take advantage of inflation. But anyway, I believe we're headed for some serious reckoning in this country, but incredible opportunity if you get up to speed.
Let's talk about the proverbial shit hitting the fan, right? So when we talk about there's a crash or we're heading towards an economic cliff, I think it's a kind of it's a vague statement, right? I think a lot of people are wondering, okay, well, are single family home prices going to crash? Are rents going to come down? Are people going to lose their jobs? Do you have here's what happened last time.
Yeah, here's what happened last time. So I don't believe single family is going to be as impacted as commercial real estate. Commercial real estate's got some serious problems. Let's talk office. Office occupancy in this country is like 60, 70%. These assets don't break even unless they're 80% or more. And here's the thing. All that debt is held by small, not all of it. I'm sorry, a third of that debt is held by small and regional banks. If you've got more than $250,000 in a bank, I would move it. I work with a bank that spreads my money over 80 banks, and they don't put more than $250 in each bank so that it's covered by the FDIC limits in case a bank failure happens. So I think we're going to see some significant bank failures. And I will tell you, the precursor to a recession and a crash is always the stock market. And what just happened a few days ago, right? We saw some big dips, and I think it dipped again today. Now sometimes that'll happen. It'll bounce and it'll come back for a while, but it's a precursor, a harbinger of things to come. And and in the other commercial asset classes, multifamily, there's a ton of operators that got adjustable rate debt, short-term adjustable rate that they're getting killed. I'm even in a couple of them. My ex-partner got me into, was dealing with on a loan modification call earlier today. And so, but there are a lot of operators that aren't going to recover from that. And so there's going to be deals there anyway. We just closed on a fantastic deal in San Antonio just 2 months ago. So they're already starting to come. I'm seeing. And right now, by the way, sales are down 90%. 90% sales are down. And so these operators that have this adjustable rate debt, they have two options. They can either sell, which is way down, or they have to refinance. And to refinance, they have to meet debt service coverage requirements, meaning the property's ability to service the debt. And with the interest rates where they are, it's just not working. And they have to buy rate caps where it caps the rate, the interest rates. The banks will make them buy a rate cap. And to give you some context there, $100 million rate cap for 3 years, 3%. So if you borrowed $100 million in 2020, you would have to pay $23,000 to have the interest rate not go up more than 3% over 3 years. Okay. That same rate cap, this is about 8 months ago that I checked, was forget 3 years, for 1 year for 3% was $2.3 million. Okay, to give you an idea what's happened with rate caps. So again, these operators are between a rock and a hard place. And so, a lot of lenders are working with them right now, but I really believe that we're going to see a lot of pain in my space, which is the large commercial multifamily. So I'm very excited because there's going to be an incredible opportunity.
So, what's interesting is that as a result of, this was already kind of happening before the stock market started to adjust a little bit and drop on Monday of this week, which whatever that was, August 4th or something like that for people listening. The 10-year treasury rates were starting to drop. The 5-year treasury rates were starting to drop. And most real estate investors they're seemingly excited, right? Rates are coming down. That's going to make it easier for me to buy deals, right? It's going to make it easier for me to underwrite and actually hit returns that I want to hit. Now, at the same time, I think it's important for people to understand rates are coming down because that's the Fed signaling that they want to stimulate the economy because they are fearful that we are entering a recessionary period and that spending is going to slow down and transactions are going to slow down, investing is going to slow down. That's their way of stimulating the economy. That's fundamentally the reasoning of them doing that. So, I think it's interesting that real estate investors get so excited about that. While on paper, yes, your borrowing costs are cheaper. Maybe that's signaling some operational challenges, and I think it's important to remember that we're leasing units to individuals who have jobs and they have to pay rent, and we have to make sure that stays together.
So my comment on that is I would be very careful with C-class assets right now, C and D, because that demographic's getting killed. I'm recently single, recently in the last year, and the first time I went and bought groceries, I'm like, are you freaking kidding me? $150 for that? And the clerk just shook her head. I'm like, how do people afford this? Or go fill up my truck, it's $140. I just flabbergasted by what's happened and that, again, that's because we printed 80% of the money in the last 4 years. And so I'm going to tell you, I don't think it can be fixed. I really don't. I think there's going to have to be a complete shakeup. But again, with crisis comes incredible opportunity. So what I would tell you, if you're listening, pick your freaking vehicle. Okay. If you could, I wish there was another one of me. I'd be buying businesses too. I'd love to buy businesses, but I can't do it and do what I'm doing now. But if you're going to do real estate, for God's sakes, decide what asset class. You're here listening to a multifamily podcast. I think it's the best one out there by far. But I'm biased, I suppose. But you got to get up to speed immediately. And so on that note, can I mention my boot camp real quick? Yeah, so November 8th, 9th, and 10th in Orlando. And if you use the code AXEL, you can come for $197. It's 3 days. Axel will be there. And it's 3 days of training. It's not a big sales pitch. I talk about my coaching for about a half hour. It is drinking through a freaking fire hose, I will tell you that. There'll be over 1,000 people there. We'll teach every aspect of, finding deals, picking a market, evaluating that market, evaluating the deals, of underwriting the deals, raising all the money you need for your deals, financing them, syndication, joint venture, and property management. We'll have 3 panels a day. There'll probably be about 4 billion represented by the panelists, who are mostly my students answering your questions. And it's just a kick in the butt, because if you know me at all, I spend time on mindset and psychology. You will leave so juiced, you'll be coming out of your skin. Okay. And there's a reason that my coaching students, my warriors, are so successful, because, they own, I think, upwards of 210,000 units now, something I'm incredibly proud of. I've only been teaching 6 years. And it's because they actually take action with what they learn. So listen, if you can come, go to multifamilybootcamp.com. And when you check out again, and go to the bottom of that website and see what hundreds and hundreds and hundreds of people have said about my events. I don't think I've ever had a complaint, and I don't say that lightly. So you'll see what hundreds of people have said, and use the code AXEL, and you get that $197 price, because the price is going up here in just a few days. But yeah, it'll be a lot of fun. Let me ask you
one question here too, because I think this is, obviously the first answer, and I know if I ask you this would be the first thing. How do we take advantage of what's happening? You have to get educated. You have to know how to take advantage of it, right? That's one.
And not just the education. It's also the connections. You got to build relationships, okay? And that's why that boot camp's so powerful. There'll be 1,000 freaking people there that want more out of life. And there'll be hundreds of my warriors coaching students there as well. So some real hitters. And so it's those two things, education and connections.
Gotcha. I'm going to paint a hypothetical picture for you, right? Because I know this is a lot of the listeners of this podcast. There's a lot of folks listening who maybe own 10, 20, 30 units. I don't know, a few buildings, smaller buildings. They want to do bigger deals. They want to, they like the idea of taking advantage of, okay, let's see, asset prices are going to start coming down. There's going to be some opportunity. I want to make that leap at the right time. What should these people be thinking about as it relates to balancing the health of what they already own and making sure that they are not the one who is distressed in any way, and that they're putting themselves in a position to actually be on the offense?
Good question. Good question. Well, number one, if your properties aren't cash flowing, sell them immediately. Okay. If they're cash flowing, I say leave them alone. Some people say, should I borrow money against them? No. See, here's the thing. These assets that we buy, these large multifamily assets, take money, but it doesn't have to be your money. There's so much money out there looking for a home, especially when the stock market starts dipping again. They'll be pulling the money out. They got to put it somewhere. And these properties pay great returns. And so, I teach, that's what I teach. I teach you how to raise that money. And, it's different than single family and small multifamily where you own the whole thing. But I don't know about you, but I'll take 20, 30, 40, 50% of something over 100% of nothing any day. Okay. And that's what you do in this business. It's a team sport, and you put a team together, and it doesn't require a lot of your own money. You can even raise the earnest money and the costs to doing the due diligence and the financing. It's called the at-risk capital. And I teach you how to do that as well. And they get a slice, whoever puts that up gets a slice of the deal. I put up $600,000 for the deal we just closed in San Antonio. So I got a slice for putting my money at risk. It's called the at-risk capital. I knew it was a screaming deal, so I didn't have any problem with it. But so again, you don't need a lot of money. You just need to learn the business, and be connecting with people. And because I will tell you, in a crisis, cash is king, but it doesn't have to be your cash. It can be people you've talked to, and you're like, hey, I teach you how to develop an elevator pitch. We just say, I don't know about you, you hope you get the question, what do you do? Say, well, I'm getting super excited because I'm going to be buying multifamily real estate. There's some incredible deals coming. And I'm always looking for partners, by the way, if you know anybody who's interested. And there you go. There's your elevator pitch. And you start talking to people, building connections, and man, you're off to the races when these deals come. So
let's rewind a little bit back to 2009, 2010, 11, 12, right? You're in the throes. I mean, you've just gone through some pain, but you are aware of the marketplace and you're looking to do more deals, et cetera.
No. Then I was not looking to do more deals, man. I got my ass handed to me. I lost everything. And so I hid under a rock for a few months. Then I actually built a litigation support company out of the ashes of that. Cause I didn't even want to hear the word real estate for a while, but, and then I decided to get back into it. And see, here's the interesting thing. When I crashed and burned, I had 800 houses along the Gulf Coast of Florida, from Bonita Springs all the way up to Newport Richie, Sarasota in the middle, 2 hours one way, 2 hours the other way, everywhere in between. So it was logistically challenged the way I had these houses. But I was only at a 30% loan to value. Okay. I only owed 30 cents on the dollar, and I still crashed and burned. But I also had some apartment complexes. So here's what killed me. There's a couple of things that killed me, because I get asked this question all the time. How could you lose? And then they're like, oh, you were over leveraged, loser. And no, I get hate online all the time. Like, no, I was at a freaking 30% loan to value. But anyway, what happened was, number one, Florida has no state income tax, so the property taxes are higher, which impact cash flow. I had properties in wind and flood zones, higher insurance impacts cash flow. And houses just don't cash flow as well as multifamily. But what killed me is most of these houses were C-class houses. There's A, B, C, and D. A's brand new, D's the hood. Stay out of the hood. Okay, trust me. But these were C-class, okay, tougher demographic, older properties, a lot of maintenance. And so they never really cash flowed that well. But here's what really hurt me. If I sent a maintenance guy to one of my apartment complexes, we could stockpile parts. Everything's the same. Plumbing parts, electrical parts, door locks, appliance parts, HVAC parts, window locks, everything. So you could stockpile parts, and a maintenance guy's in and out in an hour. Well, if I had to send them to one of my houses that's an hour one way, they've got to go see what's wrong. Every house is different. Go find a Home Depot or a Lowe's where we have an account. And then, I don't know about you, Axel, but when Rod's happy ass tries to fix something at home, I end up going to a Home Depot or a Lowe's more than once. So what took an hour at one of my apartment complexes took all day at one of these 800 houses. So the cash flow really wasn't there. And then the final straw, what killed me, was I didn't pay attention to tenant demographics back then. If they had a good job, good credit, and paid a deposit, I let them rent. Well, what I discovered after the fact was I had a ton of contractors, plumbers, electricians, drywallers, painters, roofers, and they just didn't have any work, so they couldn't pay the rent. And so it just imploded. But what's interesting is my multifamily did just fine. I would have easily survived if I hadn't cross-collateralized my packages of houses with my multifamily, where you put one loan that covers all of them. Yeah, I'd still have those apartment complexes. And that's when I realized, if I get back into this real estate game, it's just going to be multifamily. And now, again, I own thousands and thousands of apartments. But yeah, that's why I love multifamily.
So then let me rephrase, because maybe you weren't looking to do deals at this time, but even now, I think it's still a relevant question. I think despite the fact that rates are dropping and deals are priced better, I think a lot of lenders get a little bit more nervous when there's some uncertainty, right? It's a little bit harder to secure.
It's harder to borrow money. Yeah,
there's fewer lenders, right? And I think it at that point it becomes more important to have either cash to put more down, or you have a long track record, or you have lender relationships. I mean, the question I was going to have for you is how you see that changing, and I think just even having a conversation around that is really important, because I don't even think a lot of folks realize that have only been in this for the last few years, where you put a deal in a contract, you go get debt. There's plenty of lenders who are looking to finance your deal. And it's not as if it's completely non-existent if the market changes, but I think that's also a dynamic that people aren't.
I'm really glad you brought it up, brother, because I will tell you that doesn't get discussed that much. And liquidity of all sorts, equity, cash in deals and debt dries up when there's a serious crisis. Bankers dig their hole, put their head in the ground like an ostrich. And I will tell you that's a prudent conversation, and banking relationships are critical. You should start developing those. And I talk about that at the event as well. And I'm not talking about Bank of America, Wells Fargo, Fifth Third, Chase. I'm talking about small and regional banks. You develop relationships with them. You go meet the president. You go have lunch with them. You get to know them. It can be hugely valuable, because a lot of them are going to be taking back properties too, and they will finance them. Okay, so those banking relationships are very, very powerful. But the access to cash is the biggest thing. And like you said, if you put more down, you're probably fine. And so you should be talking to everybody once you start getting into this, that you're interested in this business, and you're getting excited about the deals that are coming, and always looking for partners. And they say, well, I've got 50 grand, I've got 100 grand, or whatever, I've got $1 million, and maybe we can work together. And that's what you're looking for, to go out and buy this stuff. And I teach you how to syndicate as well, where you raise from multiple people. But yeah, I mean, the access to money both debt and equity, is going to be the toughest piece in what's coming. It won't be finding the deals. It's been finding the deals up to this point, but that's going to shift when this market shifts. And like I said, my portfolio dropped. Oh, this is the thing I didn't mention. By the end of 2009, my portfolio was upside down. It dropped more than 70% here. True story. Wow. So, and that happened in other places in the country, Vegas, California, Phoenix. And, I think it very likely could happen again. And there's going to be an incredible opportunity. So, but you got to get up to speed.
Absolutely. And I'm going to shift gears here kind of a little bit. We'll move away from current events and all of that. But a lot of listeners of the podcast, they're buying small multifamily, right? I'll define that as 5 to 30, 40, 50 units in size. And then I'll go define large as 100 plus, 80. Well, it depends on your market. 75 units in Boston is large multifamily, but we're talking larger 10, $15 million plus deals. Biggest difference of a couple, you can share a couple just kind of off the top of your head as it relates to the deal making. And I want to specify that as deal making, getting those deals done.
Got it. Well, I'm going to tell you, 50 is not a small one. Okay. 30, 40, 50, you're getting 30 units, you're a $3 million asset, a minimum. Okay. But, the differences are, honestly, on the acquisition side, the biggest difference is the amount of money you have to raise. Okay. And now you have to satisfy a couple of requirements with most lenders. You have to have a net worth equal to the loan amount, but it's the team's net worth. It's not your personal net worth. You find one high net worth individual that's got a high net worth and maybe has some liquidity, you can satisfy that requirement. See, there's a liquidity requirement as well. Typically, it's 10% of the loan amount after closing. So you can't be part of your closing money, but 10% post-closing liquidity, and then net worth equal to loan amount. But again, you can very often satisfy that with one high net worth individual, a doctor, whatever. And then you've got to have some experience as well. And this is the reason my warriors, my coaching students, are so freaking successful, because most of that 200 to 210,000, we can't even keep track anymore. The 200 210,000 units they own is done between warriors. Okay, they pool resources, and that's why the group is so freaking powerful. It's almost every day there's a new deal that's closed. And so, but it's because there's strength in numbers. And so when you get into my business, the larger multifamily, typically the first one or two deals you'll do in someone else's group, or you'll align yourself with someone that's done it already. And the nice thing about that is if you meet a group and you can either bring them deals or bring them money, that's the two fastest ways to get acclimated to them, is you can use their resume. You can say, we own 1,000 units, or we own 500 units, or whatever. Use the we word, and you have instant credibility with brokers and sellers and investors. And that's how everybody starts in this business, Axel. They use the we word, they align with the group that's already done it, which is why get your butt to my boot camp. I'm telling you, there'll be 1,000 people there. There'll be tons of teams there, and just there's no better opportunity to connect. And same with my Warrior program, frankly. So if you're interested in applying to my Warrior program, text the word freedom to 72345. Again, that's freedom to 72345, and that's how you apply. And you'll leave that call better than you got on it. You'll be talking to my massive action team, and there's no obligation. But yeah, I mean, that program is extraordinary. But if that's if you don't want to wait for my boot camp in November. And but exciting things are happening, guys. I mean, I haven't been this excited in a long time, because I know that the deals are coming.
So let's talk about this, because I spent a lot of time on this podcast talking about finding deals, finding off-market deals, building your pipeline, as you know, right? I mean, that's right. Kind of what our special sauce is in our business. We spend a lot of time talking about that topic and how you can do that on this podcast. Now, in terms of getting tactical here, so maybe there's a listener who can walk away with something, who's great at finding deals. Maybe they don't have the money to go and to either pursue with earnest money deposits, or actually put down, and they don't have the capital connections to actually raise the required equity to do a bigger deal. But they got someone in their network, they know someone who can help out with them, or help them out with that, I should say. How do you think about structuring that deal? You know what I mean? So let's say we're going to go ahead and do a syndication. We got a pref, we got a split. How do we actually think about divvying up the deal and actually establishing that partnership in some capacity, where we have a deal finder, and then we have somebody who's going to raise the money and maybe help with the money?
Well, it starts with the relationships, obviously, which is why, you got to go to, if you're not going to come to my boot camp, go to local events, meet people that are doing this. And one of the things that I do, I mean, again, I'm not trying to sell the event here, but let me just say what I do, because you can do this yourself. I have everybody stand up. I have them go meet 5 people, and everybody tell the others what their superpower is, okay? Whether it's analytics, whether it's an outgoing personality. Maybe they've got some management experience for, project management, construction experience, things like that. They could be involved in the asset management. But talk about what they're good at, and then network and share information and share contact information. And so, sorry. So the first thing is those relationships, and that's critical. And don't go find a deal and wrap it up unless you're already working on finding the money as well. You do both simultaneously. I get that question all the time. What comes first, the deal, the money? Both. Okay, you got to be building relationships with people to potentially invest in your deals. And so, I tell my warriors, my coaching students, if they hold still long enough, they need to know what it is you're doing. Okay, and so, critically important. But don't get, if you're an analytical introvert, don't get too freaked out by this, because it's just building friendships. Don't overthink it. It really is just building friendships, and having a few seconds of courage to reach your hand out and say, "Hi, I'm Rod. I don't think we've met." Just something like that. And then just ask questions. I used to be really afraid of being embarrassed and stuff. And so I'd have a list of questions in my back pocket, so that, I could refer to them, and just, when you ask questions, it's like Dale Carnegie's book, How to Win Friends and Influence People. They think it's the greatest conversation they ever had, because they're doing most of the talking, and you can steer the conversation. Anyway, I'm kind of going off side roads here. I apologize.
Yeah. And I'm going to stay on this, right? Cause I'm going to push you a little bit more on it. Cause I'm thinking, So let's say somebody has done all of that, right? And they have this person that they've met at at your boot camp, they met them at a real estate event, what have you. And this
Are you
person's
looking
got,
for like splits? How much per
I'm
deal? Or
talking
what?
like, how does somebody start to think about that? Because this is a question I personally get all the time. Like, hey, I got this deal, and I know somebody who's got all the money, or they can raise all the money for it. They
Yeah.
have all the investors in their network. How do we slice this deal up? How does that actually?
Yeah.
What does that look like? Because I think
All
that's
right. Well,
really
I'll
vague
just
for
tell you
people.
at a high level. I'll tell you at a high level on our deals. Typically, whoever brings the deal and works with the underwriting and deal process gets 10%. Typically, the person that puts up the at-risk capital gets 10%. The equity that's brought into the deal, the cash out of pocket, the money, like this deal we closed on San Antonio, we raised $12 million. That piece, whoever raised that $12 million, they split 40% of the deal, or 30 or 40% of the deal. Then whoever uses their resume to qualify, like the liquidity and the net worth, gets 10% of the deal. And then typically the last piece is the asset management, which is the biggest piece. So maybe you do 30% for the money that's brought to the deal, the equity, you do 40% for the asset management, because that goes on for years. You're managing the property management company. So that is a common split. You'll see, but there's every difference under the sun, depending on the deal, and then what the preferred return's going to be, the pref, what the back end promote's going to look like. Is it a 50-50 deal? Is it a 70-30 deal? And if you have a deal presented to you that's more than 70-30, like 80-20, it's probably a very skinny deal. You need to be very careful. Okay, I've even seen 90-10 deals. I'm like, are you kidding me? Yeah. So but did that answer your question, buddy?
No, that was great. Yeah, because what's
Okay.
interesting is I think a lot of people, when they've done some of these small deals, they want to do a big deal, and they know they need to collaborate with other people, but they have no idea where to even, they're a blind guy in a dark cave trying to figure out who gets what.
Well, we go through all this for 3 days in Orlando, so just get your butt to my freaking boot camp. I promise you'll be glad you came. I promise. So anyway, I've got a lot of free resources at rodslinks.com, rods plural, links plural.com, or you can text the word links to 72345. There's free books there about almost every part of this business. They're free and they're really good. They're not like some white paper crap to get your email address. They're really good books. Some of them are best in class. And my podcast is there as well. I'd encourage you to subscribe to that. It'll help you get up to speed faster. And I'm dealing with something different than what Axel deals with, and these larger assets. So it's some slightly different conversations. So you'll learn a ton. And of course the bootcamp site is there as well. Just remember to use Axel so you get that price. If there's a problem, DM me on any social channel. I'll take care of you. All my social is there as well. So rodslinks.com, or text links to 72345.
Love it. No, and this is a great wrap up to the show. I mean, you plugged all the important stuff there, and for everybody who's listening too, I'm going to be at the boot camp speaking, probably giving some kind of a presentation around finding off market deals. Same thing to Rod's Warrior program, which is the higher level coaching program. Anything else that you want to plug? Anything else that we didn't touch on?
I mean, listen. It's $197 for the freaking boot camp. Tell me your excuse. Okay. Yeah, you got to do the travel. I shouldn't be so flippant about it, but no, I mean, again, there's a ton of free resources at Rod's Links. My podcast is there. At the very least, start listening to that. That'll help you a ton. I mean, really a ton. And, no, and I hope I see you in Orlando. Like I said, if you go to the event all 3 days and on Monday you didn't love it, I'll give you your money back. I don't mean like it. I mean freaking love it. I'll give you your money back. It's never happened, but there's a first time for everything.
So. Love it. No, this is great, Rod. Appreciate the time.
Thanks, brother. Good to see you.